Everyone, it's Michael Valtos, and this is the Orderflows market analysis for July 18, 2017. Stocks ended up the day kind of mixed, a little bit lower actually. Money moved out of the dollar. Dollar index was down about 0.5%, and crude was kind of steady as well. So let's jump into it. Brief disclaimer: this presentation is for educational and informational purposes only. Should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. A futures trader, an investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Again, the tools used in this are the Orderflows Trader Footprint Chart, and I talk about the Delta Scalper. Now we're making a change in the Delta Scalper. We're still testing it. I'll show you a couple of charts a little bit later. Basically, we just made a modification and to sort of filter out some of the trades that I wouldn't normally take. So hopefully this week we'll get it released, get it out to people that already have it. It's quite the change. You'll be pleasantly surprised when you see the charts. Just really quick, I'll just show you the Delta Scalper, what I mean, before I get into the order flow stuff. Again, this is on a normal bar chart, but I like to use the bar charts when I'm testing it. What the Delta Scalper does is it reads the order flow. It reads the delta and the price action that's going on in the bar. And okay, so this is going back to basically yesterday they reopened. Around just after 4 in the morning, it gave a sell signal up here around 24.59. It sells off all the way down to 51, gets a buy signal, makes a nice little rally. This is around just after the cash open. A little bit later, 9:15, you got to sell. It sells off. It does come back up here. The sell signal kind of sells off before it rallies back. This is 10 o'clock. 11:24, you got this little buy here. And then just before the close, you got to sell here. So, okay, so you got a loser here. This one, maybe if you're trailing your stop, maybe you could have got something out of it. This one probably would have stopped you out. But, again, I mean, look at this. You got a nice winner. This is 8 or 9 points. Points, not ticks, points. And then here, probably another 4 or 5 points. Here another, before it starts coming back up, maybe getting short somewhere up here, and you're trailing your stop and it starts coming back up here. So again, maybe another 4 points. So even though you have a loser here, this one's borderline. Again, if you're trailing your stop, maybe you're breaking even. And this one is a loser here. So, loser, we'll call this one loser. We'll call this one loser. But then you got 3 winners, nice winners. So you got small losses, 1, 2, 3, but you got 3 nice winners, right? It's only say, well, your win percentage is 50%. Yeah, well, you're getting, 3 to 1, 4 to 1, 5 to 1 risk to reward ratio. So you're losing a point here, but you're getting, 5 points here. You're getting 4 points here. You're getting 8 points here. Because here you lose maybe a point. Here you lose maybe a point. This one's probably break even, honestly. And this one you're losing a point. So would you be happy to lose a point to get 5 back? Of course you would. Everyone always talks about, you gotta have winning percentage. Don't necessarily think of winning percentage unless you put it in context with what your winning trades are. So yeah, sure, you're losing. You got 50%. You only have winners, but your winners are 2, 3, 4 times what your losers are. But anyway, I'll jump into some of this into some of these order flows chart really quick. I said it was kind of a boring day in the equities, and I'll get to the equities shortly. Let's talk about the euro currency really quick. I think it was the euro currency. Yeah, this bar here. This high. Okay, so what's going on up here, right? You got all these buying imbalances in this bar right off the high, and the bar turns down. You have this sort of shooting star candlestick, and think about what's going on, right? This is the benefit of using order flows. You can see what's being aggressively traded, at what prices are being aggressively traded. So you're coming up here, you're making new highs. New high here, you got divergence, it fails, comes back up, makes a new high, then makes a third new high here over this little period from 8:36 to 9 o'clock. So people are coming in, they're saying, hey, we're grinding higher. and people are being attracted to the market at these new highs, and they're getting aggressive, and they start buying it, and they, they're very aggressive, and all of a sudden we can't go any higher. Right, the next bar is lower. Start making a run back up here. You get a single print, and then the market sells off. But up here, it's when you see this quite regularly at the ends of moves, is you get the red bar, you got the buying imbalances up here. These are the people that are late to the party. They're trying to catch this move. They're thinking, hey, you know what, I missed my chance. I got to get in, and they're getting in. They're very aggressive, and they're buying outpaces the selling. But then what happens is, once these guys are done buying, right, it's demand coming in here from wherever, retail traders. I don't want to say it's retail traders. I don't know for certain, but you see it time and time again, where it's people are coming in after you're making a move, and they're getting aggressive. They're buying up here near the high. We've all bought the highs, and then literally the market turns around right on us as soon as we bought the high, and that's what's happening up here. And in the order flow, you can see it. We came back up within a tick of this high, and then you sold off. So these are the weak longs, so to speak. These guys are buying it here. All of a sudden they're waiting. The market's coming back up. They're sitting on it thinking, hey, you know what, now we're making that move back up. It doesn't happen. All these buyers, everyone that's getting long up here realize, and all the other smart traders realize that, hey, you know what, we're not going higher. This was a I'll say a false high, but this is kind of a weak run after we made this new high up here, that it can't sustain it, and then we sell off down here. And I'll say sell off, but we always sell off from the 20 area down to just above around 11 or 12. Eventually we do go a little bit lower here, but it couldn't sustain this move. That's the important thing, is you couldn't sustain this move on the move back up. But is really telling in here, you got the aggressive buying. You see these buying imbalances in this bar at this high. You expect the market to go higher, and it doesn't. That should be telling to you that, hey, you know what, this high is probably going to hold because the buyers just aren't there anymore to move the market higher. And then even when you get back up here, you got the single print of one lot. You got the ratio. Again, it's telling you of price rejection up here, because you're not seeing these buyers anymore. Where are your aggressive buyers? They're gone. Now I'm going to show you the bond chart, because it sort of plays along this line of, I think it was the bonds, the aggressive buying. Here it is at the high. So this was the bonds this morning. This is a 4 range chart, and okay, so sort of. So we have our high here. We hit the high here. You got a ratio, no divergence, still positive delta. Comes right back up. And then you take out the high. You take out the high with the stacked buying imbalance. 3 buying imbalances. Very strong delta. Now you got a divergence and a ratio. And again, to me, this is very bearish. But it's coming right on the back of your strongest positive delta of the morning, and a stacked imbalance. Now, normally I'm not a big fan of stacked imbalances. However, when they're taking out highs, I like them. If we hit our high here and come off, then you get a stacked imbalance. I don't like it as much, but when you're making new highs, I love to see stacked imbalances. To me, that's a sign that there's strong buying past the high, because when you're taking out, there's the difference, right? If it's a stacked imbalance a little bit below the high, again, it could be some people coming in late to the market, but if it's at the high, you're breaking out. I used to be a big breakout trader. I used to love to buy breakouts, but they don't always work, right? But when you're breaking out with aggressive buying, stacked imbalances, to me it's stronger, as opposed to you get the imbalance maybe a few ticks lower going into the high. I don't put the same weight into it as when it breaks the high. Now, so you got this stacked buying imbalance at the high, which is important. And then you got a divergence and a ratio, 2 bullish things. To me, this is a go-to trade. I take these things every day, but it's coming back into the stacked buying imbalance here, right? You got this, it draws out this zone, and you come down here, you get another buying imbalance. So you got the aggressive buyers in here again. So you're coming back down into this area where you had aggressive buying earlier, and aggressive buying is appearing again. You got here and here, and this stack buying imbalance is holding. So, even though this is bearish, I'm still running back into a bullish sign. I don't think we're going to get any lower past this stacked imbalance. It's holding. So, this is one of the things you run into sometimes, is you run into conflicting things. And it's one of those things. Sometimes it's not easy, because if you're trading, sometimes you got everything lined up, right? Like all the planets aligned, and then one thing comes out opposite, and you'll think, well, I've got 10 things stacked in its favor telling me to buy, but I got one thing telling me the opposite. The 10, it's 10 against 1, the 10 should win, but it's that one thing, the one thing that runs contrary sometimes that really just kills the whole trade. So again, you're coming up in here, you got a bullish sign, the stack buying imbalance just past the high, and then you got a bearish sign. You've got the divergence in a ratio. Okay, so it's like two fists going against each other. It's a tug of war. And then what do you get in the next bar? That's why the next bar, this bar here at 755 is crucial. What's it going to do? Are we going to break through the stacked imbalance? Is the buying going to be here or not? And basically, and here you see it's showing up. You got the imbalance, you got the imbalances, and it holds. We rally back up to the high, and we make new highs. I said, okay, equities, S&Ps. It says quiet day in the S&Ps. Let me just find my chart here. Give me a second here. Make sure I got the right chart. It's a 4-range chart. Okay, let's pull it in here. I gotta clean up some of my charts here. Okay, so there's this 3 in a row. I talk about 3 in a row trades. You got ratio, the red bar, pull back in between these 2 point controls, this one and this one, which you do, and then you rally. So what do you got? It's a continuation trade. So we have our low here, swing low, rally up, almost got a 3 in a row here, doesn't get it. This one's 17. Then you got ratio, and then you get it here, boom, 1 2 3 again, which is telling you the market's moving. You're seeing some price rejection below these bars, and you're looking. So you got the green bar, 1 2 3, you got bullish ratio. 4th bar in, look for the red bar, the pullback between these 2 point controls. This is where you'd be getting in. Your stop would be just below this, and then you get it. You get it's not a stacked imbalance. You get 3 buying imbalances in this bar, another 2 here, and then it looks like it's just going sideways on you, and then later you get this nice pop up to the close. Okay, so thanks for watching this video. To learn more about trading software used in this presentation and how you can profit from order flow, visit my website, www.orderflows.com. And again, I'm still we're still testing the new version of the Delta Scalper, but early results do look nice. So watch my YouTube channel over the next day or so for another video on the Delta Scalper when I get enough charts printed, or when I get enough good examples. I'll say good examples. When I get enough examples, we're testing it over many different markets, different time frames, different chart types, range bars, minute base charts, just to make sure it's robust, and because a style of trading should work over different markets, right? I mean, you shouldn't just have, for a way of trading, it shouldn't just be specific to one market. I mean, if how you trade crude should also apply to how you trade minis or bonds or euro currency. If something is tailor made for one market, it's not going to be robust, and it's probably not going to stand the test of time. So Delta Scalper was good originally. I know people that were trading it, and built trading systems around it, and right now we're just refining it to find, I'll say better trades, but, just sort of, get rid of some of the types of trades that I wouldn't take. There are trades I don't like to take. And here, DAX really quick. DAX 1 minute chart. DAX moves pretty quick, and if you're on the right side of trades, boom, this is what can happen. You're buying it here, next thing you know, it's 30 points higher. So it's giving you some nice trades. Now here was a sell. It unfortunately gave you a buy here before it fell over. Here's a nice little sell. Here's some buys. And it doesn't catch every single move, but if you could catch a move like this from 80, 82, 83, 84, 85, all the way up to 15, you only need to catch a few of those. Yeah, you could deal with getting stopped out, small stops here, but if you're catching moves like this that are 25, 30 points, and you're just losing 5 points on on these losers. Like here's another one. If you can somehow manage this trade, right on the next bar, it ticks lower before it makes this nice move up. If you catch this move from 405 all the way up to the 420s, that's a nice trade. Here's a nice little sell before it turns around. Here's another sell. This is already after the cash closed, but that's just a preview. Just a preview. Again, it's not every trade is going to be a winning trade. Don't think for a second that this picks every single trade as a winner. No, but what you got to do is you manage the losing trades, right? You get stopped out. Okay, you look for the next trade. It's not the end of the world. What you want to do is take your small losses here, but catch the nice winners like this. Sure, you get stopped out here. Sure, you get stopped out here, but you got a nice winner here. You got a decent winner before it gives you a buy. I don't know if this one may have stopped you out. When you get in on the next bar, this is a 1 minute chart. It does tick lower before it turns around, goes up. But again, if you could catch big winners and keep your losers small, that's the whole point of trading, right? Keep your losers small and let your winners ride. So if you got a way that's going to catch you nice moves like this, then happy days. So anyway, guys, I won't keep you on here any longer. I said, I'm working on another video for the Delta Scalper, which I hope to get out and just show you guys a lot of examples on the types of trades. I don't want to get into it on this one, otherwise this will be an hour long. So thanks everybody, and hope to have the trading room back up again tomorrow. So bye bye.